Hello, everybody, and welcome back. We've all survived a very long and a very strange tax season, and some of you may have come out the other end realizing you're in tax trouble. Regardless of whether or not this is a situation that has been compounding for years or it's a brand new problem for you this year, it can be confusing, overwhelming, and downright scary. As much as the IRS has been made out to be this big, bad, scary entity that's out to get you, it does provide several options for taxpayers to utilize to resolve their tax situation. It's an entire process called tax resolution and is one of my favorite things to do for my clients as a CPA. Today I'm going to be talking about some of the options available to you, starting with the most basic, installment agreements. If you owe less than $25,000, it is very simple to put an installment agreement in place. You can call the IRS, you can hop online, or you can ask your tax preparer to file a 9465 with your tax return. If you owe more than $25,000, it does get a little bit more complicated and time-consuming, but it's still a simple process. It's just that some additional forms and phone calls may need to be made. What you need to know about installment agreements is that having the installment agreement in place does not stop penalties and interest from accruing. That is actually something that is very misunderstood and confusing to people. But as long as you owe money to the IRS, penalties and interest will accrue. So I do encourage you that if you can, pay your installment agreement off early. There is no penalty for paying it off early, so it's definitely the most beneficial option for you. Now, I talk about penalties all the time. Sometimes they can get relatively overwhelming, so there is a tax resolution option called penalty abatement. If I feel that the penalties are so high that it is creating undue burden on my clients, I will recommend a penalty abatement. Essentially, what we need to do is convince the IRS that there were extenuating circumstances that prevented you from being compliant or that the IRS made a mistake. When we're able to convince them of this, then the penalties and the interest associated with them falls off of your account. However, I do recommend that once we get that penalty abatement in place, that agreement, you need to make sure that you stay in compliance on everything else to prevent additional penalties and interest from accruing, because it doesn't stop that process. So if I do a penalty abatement and have those removed and you still owe money to the IRS, the next month, more penalties and interest will accrue. Now, if you owe money to the IRS and have for a long time and haven't been able to pay it off, you may have something called liens associated with your account. And generally, most people don't even know that they have them because they don't really read the letters the IRS sends until they try to do something like refinance or buy a house. That is the most common situation that brings it to light. Now, we can do something called lien removal, but it is very difficult to do because the IRS is only going to remove those liens under two circumstances. Circumstance number one is that you pay the debt. The second circumstance is that the IRS has made a mistake. So as you can see, it's very difficult to catch them in mistakes because they're very, very careful about making sure they follow their processes, although it doesn't happen all the time. So if lien removal isn't going to work, I generally recommend another option to my clients called lien subordination. What lien subordination does is ask the IRS to please step to the side and basically temporarily remove the lien from your account so another creditor can step in front of the IRS and get the closing done. So you can get that refinance or the closing of the house done. Essentially, though, the IRS is not going to do this out of the goodness of their heart. It has to benefit the IRS somehow. An example of this would be a refinance. You are refinancing the mortgage on your house for a lower interest rate, which means your mortgage payments are going to be less, which means you have more money to send to the IRS to pay off your tax debt. In that case, the IRS is more than happy to step to the side and allow the other creditor through so that the closing of the refinance can take place. It can be an expensive process, though, and take some time, so you want to make sure that you're looking at this because it's not something that happens overnight. The IRS has 30 days to even look at the paperwork, and then we are working at the speed of the IRS, so things move slowly. And now it's even worse because of COVID-19 has really reduced their capacity. So if you are thinking about buying a house and you own or refinancing a house and you owe money to the IRS, you might want to look at whether or not you have liens on your account and what we need to do to have the IRS step to the side. Okay, so some people owe a lot of money and they just can't pay it right now. But in a year or maybe 2 years, their financial situation is going to change and they're going to be able to start making payments. This is an option called currently not collectible, or also known as CNC. And essentially what it means is we ask the IRS to please stop all collections efforts. No more letters, no more threats of showing up at your house in order to collect money or start a process. However, the CNC does not stop penalties and interest from accruing. So what we need to do is still make payments, because if you don't, your debt will grow over that period of time. After a year or 2 is up, the IRS will start sending letters again, and at that point in time, we'll have to evaluate other options for you. Now, the last resolution issue I want to bring up is called an offer in compromise, or OIC. Now, these are very expensive to do, and only 15 to 20% of them are accepted by the IRS. The stats in my office are close to 100% because I make sure to do all of my homework and make sure that it is actually going to benefit the client. I have to have a high level of confidence it's going to go through. But what an OIC does is negotiate a reduction of your tax liability with the IRS. So for example, let's say you owe $50,000 and there is just no way you're going to be able to pay that at any point in time. Well, we might be able to go into an OIC so that we can ask the IRS to reduce it to, let's say, $10,000. Now, there's a lot of compliance that goes with it, and you want to make sure that you listen to your professional when it comes to doing the OIC, because it can be taken away as easily as it is accepted. But it is an option that is out there that you might want to explore. Now, any of these options can be rejected by the IRS for a multitude of reasons. And if it is, there is an appeals process where we can appeal their decision. However, appeals cost you more money in addition to all of the other tax resolution options. So you want to make sure you have a conversation with the professional helping you about whether or not that appeals process is going to be worth it or not. Sometimes it is, sometimes it isn't. It's a serious conversation to have. Now, there are all kinds of people who can represent you. Well, I should say 4 kinds of people who can represent you. You, yourself as an individual, can represent yourself to the IRS. In a lot of these cases, I don't recommend it. When it comes to an installment agreement, go ahead, that's perfectly fine. But when it comes to some of the more complicated issues, I highly recommend you use a professional, and there are only 3 types of professionals who can represent you. 1 is an attorney, 2 is an enrolled agent, and 3 is a CPA, or certified public accountant. The other thing I want you to do is to watch out. There are a lot of companies out there who market that they help with tax resolution. And what they do is charge you a monthly fee every month. Okay, you're paying this until the situation is resolved. I really don't like that for my clients who've come in and have had to do that, because there is absolutely no motivation for that company to resolve that situation as quickly as possible. As a matter of fact, they're kind of encouraged by a monthly fee to let it drag out for as long as possible. Now, tax resolution tends to take a lot of time. As I mentioned before, we are working at the speed of the IRS, but it shouldn't take 12 months, 24 months, 36 months. It should take a lot less time than that, unless, of course, you as the client are doing something you're not supposed to. So if anybody says, just pay me every month until the situation is resolved, I highly recommend you turn around and you go find somebody who is going to charge you a flat fee. Now, here's the other issue that you guys need to make sure you take note of. You are going to pay a professional, most likely, to do a lot of these complicated processes. However, that professional, no matter how confident they are in the outcome you're expecting, cannot make any guarantees. And I would not work with anybody who tries to give you guarantees. So not only can they not make you guarantees, but you are still going to have to pay them because of all of the work that is involved. So keep that in mind as well, and make sure you listen to them and you stay as compliant as possible while going through these tax resolution processes in order to make sure that the outcome comes out as close to where you want it as possible. All right, you guys, so there's my spiel on tax resolution. At some point in time, I think I'm going to do a video on just the OIC because it can be complicated and long process. But in the meantime, I hope you all have a wonderful week, weekend, holiday, whatever we have going on, and we'll see you next week. Take care.